Welcome to the Ontario Mortgage and Real Estate Insights podcast, your go-to source for the latest developments, trends, and regulatory changes in the industry. I'm your host, Steve Hamoan, here to provide you with insights sourced from reputable news outlets to help you stay informed and make well-informed decisions.
This podcast is brought to you by Real Approved Inc., a trusted mortgage brokerage dedicated to helping Canadians achieve their homeownership dreams. Visit realapproved.ca to learn more about how our experienced team can assist you with your mortgage needs. Let's dive into today's episode.
Today, we're diving into the latest survey results, showing that markets are expecting 2 more rate cuts from the Bank of Canada this year. The survey suggests the bank's policy rate could fall from 2.75% to 2.25% by the end of 2025. That's 2 additional 25 basis point cuts expected over the coming months.
That's right, Steve. And it's interesting to see how the market's expectations align with forecasts from major banks like the Royal Bank of Canada, Canadian Imperial Bank of Commerce, and Toronto Dominion Bank. They all foresee the Bank of Canada's rate dropping to 2.25% by year end. However, Bank of Montreal and National Bank are even more aggressive, expecting rates to reach 2%.
Exactly, Janine. It's a fascinating time as these forecasts come amid a downgraded growth outlook for North America, largely due to escalating trade tensions with the United States and weaker global demand. Scotiabank, on the other hand, has updated its forecast to reflect 3/4-point cuts in 2026, emphasizing the uncertainty in the economic environment.
That's a great point, Steve. The survey also highlights growing concerns over Canada's economic outlook, with participants assigning a 40% probability of a recession within the next 12 months. Inflation is expected to hover around 2.4% by the end of 2025, easing to 2% by 2026. It's a lot for Canadians to consider as they plan their finances and home ownership goals.
No doubt, Janine. The slower growth expectations, with real GDP growth forecasted at 1% for 2025 and 1.7% in 2026, are crucial. Nearly 45% of survey respondents see risks tilted towards lower interest rates, indicating a cautious outlook.
And let's not forget the bond yields, Steve. The 2-year, 5-year, and 10-year Canadian bond yields are projected to remain in the 2.5 to 3% range through 2025. This stable outlook for bond yields can impact mortgage rates and the broader real estate market.
Let's delve into the recent changes introduced by the Canada Mortgage and Housing Corporation, which are designed to make home ownership more accessible, particularly in high-price markets like Vancouver Island. These changes came into effect in 2024 and are aimed at helping both first-time homebuyers and current homeowners.
Absolutely, Steve. It's heartening to see efforts being made to ease the path to home ownership, especially for those entering the market for the first time. The new regulations are not only about making it easier to save for a down payment, but also about supporting renovations, which can be crucial for many families.
Indeed, Janine. The Canadian government has introduced policy changes to increase home construction, which could potentially stabilize prices. This is a significant benefit for all buyers. Brenda Carmichael from Coastal Community Credit Union emphasizes that when houses become more affordable, it becomes easier for first-time buyers to enter the market, particularly in regions with higher home values.
That's a valid point, Steve. The changes under the 2024 CMHC mortgage regulations provide several advantages. First-time buyers can now qualify for a mortgage with a lower down payment on CMHC mortgages up to $1.5 million. Additionally, these buyers can benefit from lower monthly payments when purchasing new or existing homes with a 30-year mortgage.
Right. And there's also the Enhanced Home Buyers Plan, which allows registered retirement savings plan withdrawals of up to $60,000, up from $35,000. Couples can withdraw up to $120,000 for a down payment with a 5-year grace period before repayment starts. This is a substantial improvement in helping first-time buyers.
It's great to see these opportunities, Steve. Plus, the First Home Saving Account allows individuals to save up to $8,000 per year tax-free, which is another fantastic tool for accumulating a down payment. And don't forget the first-time home buyers tax credit of $1,500, which provides further financial relief.
Additionally, rental payment history can now support mortgage applications, and there's the option to cover renovation costs with the Purchase Plus improvements at the time of purchase. These are strategic moves to assist first-time buyers in securing and improving their homes.
And it's not just first-time buyers who benefit. Existing homeowners looking to renovate or purchase can also take advantage of these changes. They can qualify for a mortgage with a lower down payment, enjoy lower monthly payments on new homes, and have an easier process to switch to coastal community upon mortgage renewal.
Exactly, Janine. There's also the option to refinance to build rental or in-law suites, which could be a smart investment. Plus, low-interest loans are available for renovations, and there are grants or interest-free loans to make homes more energy efficient. These options provide a broad spectrum of support for homeowners.
I agree, Steve. It's vital for buyers and homeowners to get the right advice on what they can afford to set realistic goals. As Brenda Carmichael suggests, having someone explain the mortgage process and help with approval can be invaluable. It's all about starting the journey, and these changes certainly make that first step a little easier.
Let's turn our attention to the luxury real estate market in Ontario. A mansion in Caledon has recently caught headlines after slashing its asking price by a staggering $3 million. Originally listed at $8 million, the price has now been reduced to just under $5 million.
That's quite a significant drop, Steve, and it really highlights the challenges that the luxury segment of the market is facing. This particular mansion is not only architecturally impressive, but also offers over 10,000 square feet of living space on nearly 10 acres of land. It's truly a stunning property.
Indeed, Janine. The property features include a grand circular foyer with natural stone floors, elegant lighting from England, and warm wooden paneling. It's shaped like a boomerang, providing sweeping views of the surrounding nature from every room. The amenities are top-notch with a chef's kitchen, heated floors, and a gym. It's a real masterpiece.
And yet, despite all these luxurious details, it's still struggling to find a buyer. The property was even briefly listed for just $1, a tactic often used by realtors to ignite a bidding war, but that didn't seem to work either. It seems the market conditions in rural Caledon, where property values have dropped by 15% in the past year, are really taking a toll.
That's a good point, Janine. The broader economic factors are certainly at play here. With the current economic slowdown and the potential for further interest rate cuts, buyers might be hesitant, waiting for the market to stabilize before making such a significant investment.
Absolutely, Steve. It must be a difficult time for sellers in these areas, especially when you consider that properties like this mansion, with its nearly 10 acres of land and an in-ground pool, offer so much potential for a beautiful family home or even a retreat. It's essential for sellers to be patient and perhaps more flexible with their pricing strategies.
Yes, Janine. Patience and strategic pricing could be key here. The market dynamics are changing, and while luxury properties offer incredible value, the current economic uncertainty makes it a challenging time for high-end real estate. Sellers need to be prepared to adjust their expectations and work closely with their real estate agents to navigate this market.
It's a reminder that even in real estate, as in life, timing and adaptability are crucial. For potential buyers, this could be an opportunity to acquire a unique property at a more accessible price point. It's all about finding that balance and making informed decisions based on current market conditions.
In our final segment today, let's shift our focus to the political sphere, where 5 prominent home builders in the Greater Toronto Area have thrown their support behind the Conservative Party's housing plan. Arista, Deco, Fieldgate, Opus, and Paradise have all endorsed this platform, citing it as the most effective blueprint for delivering affordable homes.
That's an interesting development, Steve. It seems these home builders are really resonating with the Conservative Party's focus on addressing the issues of affordability and housing supply, which are critical concerns for many Canadians.
Absolutely, Janine. Michael DeGasperis, the president and chief executive officer of Arista Homes, mentioned that the current burdensome regulations, rising costs, and housing shortages are significantly impacting Canadian families who are being locked out of the housing market. He believes Pierre Poilievre, the Conservative leader, is offering real, practical solutions.
It seems like the Conservative platform is aiming to tackle these issues head-on by proposing measures such as eliminating the GST on new homes under $1.3 million, reimbursing cities for development fee reductions, and removing taxes on home renovations. These steps could potentially make a big difference for homebuyers.
Indeed, Janine. Stephen Weiss, co-owner of Paradise Developments, also emphasized that a conservative government could help revive the home building industry, which is currently facing its worst downturn in 35 years. Their plan to join a rally with Pierre Poilievre in Pickering to discuss these policies indicates a strong alignment with the conservative agenda.
It's clear there's a growing demand from voters for action on housing affordability and supply. As these builders express their support, it highlights the importance of having policies that align with industry needs. It's about finding practical solutions that can make a real impact on people's lives.
Exactly, Janine. While this endorsement is significant, it's important to remember that housing policies can be complex and multifaceted. The success of these initiatives will depend on effective implementation and collaboration across different levels of government and the private sector.
Absolutely, Steve. Collaboration and a comprehensive approach are key to ensuring these policies truly benefit those in need. It's a reminder of the broader economic and political factors at play in the housing market.
Thanks for tuning in to another episode of the Ontario Mortgage and Real Estate Insights podcast. We hope you found today's insights valuable as you navigate the world of mortgages and real estate.
Before you go, a quick reminder, Real Approved is here to make your mortgage journey smoother. Whether you're buying your first home or refinancing, their experienced team is ready to guide you with personalized support every step of the way. Visit realapproved.ca to get started and take the next step toward achieving your homeownership goals. Catch you next time and stay informed with the latest industry insights.